I don't want to say Happy New Year yet because it's not the new year, and I don't want to wait until the new year to put in my stop loss orders. I've put them in, and some of them have already kicked in, but that's okay. I've locked in my profits. I know, or I believe, the market is going to correct. Wall Street has all the motives possible to want a correction shortly after the first of the year. Why? Because they have tremendous gains, particularly in the Magnificent Seven, particularly in NVIDIA, and they want to bill their clients for a percentage of those gains right after December the 31st when they close out their books. Then they want the stocks to go down so they can start over and regain that growth over 2024 so they can bill their client for it again. So they're going to bring the price of the stocks down shortly after the first of the year. That's my belief. And then we'll get back on this AI, artificial intelligence, machine learning, quantum computing rally that's going to last over the next coming decade. The best opportunity to make money in the stock market in your lifetime. But right now is the time to enter your stop loss order. If you don't know how to do that, I'll tell you right after I share with you. This is not financial advice. This is financial education.
Best of Us Investors presents Kerry Griegmeyer.
This is my trading platform, and I use E-Trade, and I'm going to look at NVIDIA. So I'm going to click Trade here, and I'm going to tell them that I want to sell 80 shares of NVIDIA, and I need to click on Sell there. So there it is. Then it's asked me the price type, and I want to go down and say trailing stop. I use a percentage. As you can see, you can put a dollar amount in there as well. And I'm going to enter, rather than 10%, I'm going to put 5%. And with that, I then say I want to put that in good until cancel or for 60 days. I then preview it, I authorize it, and now if NVIDIA drops from where I entered it, currently at $497.96, if it drops 5%, it closes me out. Why do I want that? Because if it drops 5%, I think it's probably going to drop another 15%, and that's where I want to buy back in. And that order is now good for 60 days. So it protects my profits. I'm not really worried about the taxes on it. I'll deal with that in another way. Stop loss orders are a fantastic risk management tool. It takes all the risk out. When you get some gains, and usually in my case, if I get a 24% gain or more, I will enter a stop loss order so that it triggers the loss. All it does is then, if the stock is going down, it gives me the opportunity to create a lower cost basis. There are some other things that you should be considering here at the end of the year. If you're retired, you're going to have to take a required minimum distribution out of your IRA or your 401k. I would strongly suggest you consider taking that distribution and putting $7,000 of it for you and for your spouse into a Roth IRA. That way, if we do get the growth that I'm expecting over the next 10 years, I can go to that money and sell it and not pay any taxes on it. If you're younger, by all means, if you've got $6,000 laying around and you want to invest it, put it into a Roth IRA. You can do that every year. Then when you get to 65 and you retire, you can get that money out with no taxes. The benefit from that far outweighs the tax deduction that you will get on putting into a conventional IRA. If you've got another $6,000, I would say, okay, put that in the conventional IRA or your 401k or something of that nature. But the number one thing you should be doing every year is feeding that Roth IRA. Where should it go? The Magnificent Seven. They've got the money, they've got the energy, they've got the talent, and they understand what artificial intelligence is going to do. They understand innovation. They understand quantum computing, and that's where the future lies. Now, beyond that, there are probably another 20 stocks that I have in my Bus 12 and Bus 13 portfolios that are going to give you excellent returns, probably some of them even greater than the Magnificent Seven, because they aren't starting from such a high point. It's hard to take a $3 trillion company and turn it into a $6 trillion company, but it's not so hard to take a $2 million company and turn it into a $1 billion company, and that's exponential growth. That's one of the things I'm looking for. That's my quest right now. I'm going bear hunting. I know what the bear looks like, and I know that he likes honey, and I know that the key to it is not market momentum. No, it's earnings. It's earnings per share. I want to find that $10 million company that's going to turn into a $1 billion company because they have something that the Magnificent Seven can't move forward without. It's happened before. When Apple became the cell phone of choice, they brought a lot of small companies along with it because they needed that element. Well, quantum computing is going to need an element. Artificial intelligence is going to need an element, and I'm looking for the bear. I'm laying the honey down, and I'm looking for that exponential growth. I'm looking for that 1,000, 2,000, 5,000% increased stock. That's how I spend my day. And I'd love to share my knowledge with you. So come to my website, Best of Us Investors, sign up for our Platinum program, and I'll show you the way. You just need to put in the time and the effort, do your due diligence, and why don't you make yourself rich? Huh.